Alright guys, as expected, Fed just paused the rates at 550, right? 5.5. Indeed, it was widely expected, as I've been mentioning already. They either pause now or they pause, they hike now and then pause in December. But it was widely expected, as I've just mentioned already twice. But now, what is the big point? Why is this pause was a very different pause from others? I kind of felt a bit dovish, for an instance, on the US dollar. That was very, very difficult for me to, getting in and see like, okay, so maybe they're not more hawkish as they would be before, because before they did pause the rates again, but they were more like in a hawkish stance, right? Well, for the luck of all of you, I've broken down what the Jerome Powell said on the press conference, right? And indeed, it is on my Telegram group. So what I would do is I'll come here and give it up for you guys, because it is a very important, but I'm not going to do this every time, so you need to be into the Telegram and you know how to get access to the link for the Telegram. Anyways, now the Fed had hit the pause button rates, and this is my take, right? So as I've mentioned, honestly, it was widely expected the Fed would pause the rates. Even in the CMA2, we have the CMA2, that was the one I've put it up on the video yesterday. 98.2% of the market was expecting a pause already, okay? So first, he, going through the press conference now, Powell has emphasized that he and his colleagues are laser focused on the dual mandate to boost employment and maintain stable prices for the American people. They are also committed to getting inflation down to the 2% goal, but he did mention that we haven't fully felt, the impact of policy tightening yet, because it takes time for actually, all the rates, the 550 basis points hike they've done through, since last year, 2 years ago. Now, it's not like that will happen. It will take a few months, so then it can be felt. It is feeling a little bit, but not fully affects. He made it clear that Committee is proceeding with caution, right? They will base the decisions on the overall data, economic outlook, and the balance of the risks, okay? Talking about economic developments, he mentions that the recent data from the US has been quite strong. Well, it is very strong, right? We had the quarter 3 GDP, we had NFP beginning of this month, right? Well, not this month, last month in October, 4 weeks ago. And indeed, it was everything higher than expected. PMI, services and manufacturing PMIs, not the ISM, the normal ones, were higher than expected as well. So these show us and prove us how strong the economy actually is, how resilient it is, right? Recent indicators suggest that economic activity is expanding at a strong pace, okay? Just coming back for the quarter 3 GDP that came in 4.9%, the mainly reason why it came that high was because consumer spending, all right? Because people getting off and spending the money and so on, okay? Other interesting thing he said was the evidence of persistent growth or a tight labor market could put progress on inflation at risks and lead to more monetary policy tightening. So basically what he want to say to us here is that if the economy continues to be strong and resilient and getting this growth as it is right now, then they will raise rates again. So in my honest opinion, I guess we need higher than expected NFP, right? We had the ISM manufacturing PMI this, I think it was 1 a.m. in the morning. It was lower than expected. So this is already showing us maybe a weakening path for the US dollar next year, okay? Anyways, so that's pretty much what he've mentioned. But now I want to bring the attention to this image here that you guys are seeing. That is the statement. Well, on the left side or in the right side, I don't know, the one from November 1st is the one from today, and the one from July 26th is the past one, right? We can see that I've highlighted the dates in yellow, but I've put it a red line, indicating what has changed into last one, that was 26th of July, and for today's one. So pretty much they've took it off from last one that the economy activity has been expanding at a moderate pace, and they substituted this for economic activity expanded at a stronger pace in third quarter. So indeed, they, as I've mentioned, GDP was very high. Now, they took it off as well that the job gains have been robust in recent months to job gains have moderated since earlier in the year, but remains strong, okay? So that was pretty much the big changes they've done into this statement. Not much to look there. Now, this is all from the FOMC, a quite dovish instance, neutral to dovish instance. I'm quite worried about euro dollar now on that range. So I will most probably liquidate my positions as I want to see what will happen into the market ahead, into next week, and then maybe get into positions again. So for now, my portfolio is nothing on my portfolio. So closing up all my positions. All right, guys. So that's my take from the FOMC. I want to hear your take as well. So give us a comment. Put it up. What do you think about the FOMC? Did you think that this was hawkish? You think this was dovish? Maybe neutral, more neutral hawkish, neutral dovish. Let us know. So put it down in the comment and give us a thumbs up on this video. Share this video with your friends. Subscribe to our channel, and I see you in the next video.